Hi, I'm Tracy Barrett with the Focus on Nova Real Estate team at Century 21 Redwood Realty. Welcome to the Top 3 Takeaway. I'm super excited to introduce my friend Ed Jones, who is a CPA and at our disposal to help us out from time to time with our clients. Today he's going to talk to us about the tax implications of selling your home. Ed?
Thank you, Tracy. This is a question I get asked all the time when a client of mine is selling a property, a realtor calls me up. Everything starts at what is the gain when you sell a property? The gain in selling a property is your selling price minus what you originally paid for it, minus any improvements you've made, and minus any selling expenses. This is why it's so important to keep a house file as you're doing improvements to your house, build on, so on, because decades can pass and then you sell the house later on. So keeping that together really helps you. Once you've determined the gain, the question is it going to be taxed? A person's primary residence has a wonderful effect in the tax code that says a single person can have up to $250,000 of gain without paying any tax. And if you're married, it's $500,000. You can do this every 2 years. It's a huge deal. They're trying to make it so that most people aren't being taxed when they sell their primary residences. You have to determine, do you qualify for this? You'll qualify for this by it being your primary residence for at least the last 2 years, and you haven't done it before in the last 2 years. Then the question starts happening, well, what if I have more than $500,000 of gain? Do I have to pay tax on it? The answer is yes. You would have to calculate out it, and you have to report it on your tax return. In addition, settlement companies have a requirement to report the sale if there's a sale in excess of $500,000 to the IRS. So sometimes, even when you don't have any gain because of this, you still need to report it to the IRS when filing your tax return, or else you're going to get a confused letter from the service going, hey, we saw that you sold a house for $400,000. We don't see that you've reported it, so we're just assuming you owe us $120,000 in tax. Let us know if we're right. It's a terrifying letter to get if you're not a professional. I get calls about them all the time. Very easy to respond to. Make sure you know when you need to report things. So the settlement company will give you a settlement sheet. I used to be called a HUD-1. Hidden on there's a whole bunch of stuff I need to get the taxes done. That might be the only place that shows what real estate taxes that you actually paid that we get to deduct on your return. There's a whole bunch of information in there. So essentially, when selling your primary residence or your property, the biggest takeaways I want you to take from this is, number one, when you buy a house, set up a house file, keep track of all your improvements, keep your settlement sheets there, because I might need it 20 years later to save you a lot of tax. Number two, in most cases, people selling their primary residence are not going to pay any income tax, but you might have a reporting requirement, especially if the property's selling for more than $500,000, so you want to pay attention to that. And the third thing is that settlement sheet is like a little Bible. It's critical. It's something you desperately need to keep so that someone like me can look through it to make sure you're not missing any of your deductions. It gets a lot more complex when you're selling properties that are investment properties or rental properties or properties that you've inherited. There's a lot of planning to do with real estate, as it's often a huge piece of someone's estate when they're trying to determine how to move stuff to other people's, trying to move stuff down the generation to avoid taxation on it. That is its own 20-minute talk that I'm sure at some point you'll pull me in here to do. I hope this was helpful.
Thanks so much, Ed. That's why I come to you with all my tax questions as well as preparation of both my business and personal taxes. So, taxes, their implications of selling your home, that's the 1, 2, 3. If you have any other questions or would like to explore this further, contact the Focus on Nova team today.